sometimes it's so simple it's almost hard to believe, but this one is. The market has been very, very good about noticing catastrophic events that are going on in Washington only about 2 days before they're supposed to happen. Now, this is just the pattern. I don't know why, but that's what it is. I think that oil, like the stock market, is a raging buy, dependent upon what happens in Washington based upon the sequester. It has never been this expensive this early in the season. I'm not talking just about oil, but gasoline specifically. You know that if you've filled up your tank at any point over the last several weeks. We're pressing $4 a gallon again in gasoline, and we're in the middle of what is the down season for gas. There's nothing geopolitical on the horizon that we don't know about anyway. I mean, all of the geopolitical issues that we've been talking about for the last 2 years remain pretty much static, not really much dynamic happening with those. And in general, the only reason you can see for oil being up here at the time are a couple of issues. One, it's a solid risk trade, and everybody's looking for the next quality risk trade. In some ways, the ability of the refining stocks to do so well over the course of the last quarter or two has been reflected again in crude oil and gasoline. There's always a commodity side to every stock side of bet or investment or play that you want to name, and so that's been sort of paralleled itself between the stocks and the commodity side. And besides that, you do have you're looking at what is a reach out of production in gasoline that has been dropping on the East Coast and been trying to increase on the West Coast, and so there's been some local shortages that have played into that too. So in the oil markets, to try and put it all together, I think we've seen by far the lows that we're going to see for 2013, and that is only bounded by whatever geopolitical, surprises that still remain out there. There are so many that we know about, including Iran and so on, and Libya, and to some degree Venezuela. But there are others that we don't talk a lot about. We don't talk about Nigeria. We don't talk about Azerbaijan. We don't talk about the Kurdish areas of oil. We don't talk a lot about how, in fact, the perception of Keystone will affect oil prices. So there's a lot out there that that will play into a price, whether they have fundamental reasons or not. And I think we've seen the lower end. We saw basically $83 very early in the year, and I would be shocked if we ever got back there again. I think you're looking at some technical levels in the indexes. You could do the same exact thing for oil and buy it with confidence, down towards those levels.
Dan, you mentioned you thought in the beginning there, you thought that the sequester was a reason why we've seen some weakness over here in oil, and is that attributed to the expected lessening of demand on oil and gas as maybe consumers pull back or something like that, or something else?
It's a GDP play. I mean, it's just as simple as that. You get a negative GDP number for the fourth quarter, and that negative GDP number in the fourth quarter was all representative of a dropping of governmental spending, public sector spending. I mean, you go and you analyze, the report from the quarter. It came out, I don't know,